Ford reported quarterly earnings and revenue that missed analyst expectations on Tuesday. Here to give us a clearer picture of the results, Ford CFO Bob Shanks. Bob, what led to the misses on the top and bottom line this quarter?
Well, we actually met guidance and expectations, both internal and as well as the first call estimate for our pre-tax profitability. There was an issue on tax rates. We had a higher tax rate than the market expected and was forecasting, so that affected the net income and the EPS. And if you look at the top line on the revenue, I think the market probably didn't fully factor in the impact of the strong U.S. dollar and the effect that would have on the revenue of our international operations. We were down about $2 billion in revenue, and 70% of that or so was related to the impact of the strong U.S. dollar. So I think that was the factor on revenue. Tax is the issue on net income.
Yet North America, clearly the company's biggest pocket of strength. How much is the changeover to the new aluminum-bodied F-150 still impacting results there?
Well, let me give you a really vivid example. We were down in terms of wholesales for the F-150 by about 40% in the first quarter compared with a year ago. We also have the launch of the Edge underway as well. That was down a little bit over 50%. If I take those two vehicle lines and I just simply normalize production and take out the effect of the launch constraints, we would have earned more than $1 billion more in profitability for North America and therefore the company. And the North American operating margin, which came in at 6.7%, would have easily exceeded 10%. So it really shows you the impact that the launches of those products have had. Most of that actually is the F-150. So we're coming out of the launch as the quarter comes to a close, the second quarter comes to a close. So we've got very, very good expectations, strong expectations about the balance of the year, and look forward to sharing that with you when we come to each quarterly close.
Yes, and now on another hand, the company saw weakness in both Europe and South America, although results did improve there. Russia is still a concern. What is Ford doing to further improve its presence in these markets?
Well, in South America, we're doing everything we can do. What's really happening in South America is a cyclical downturn. It's not so much a Ford issue, it's an overall regional economic issue. You're seeing declining industries, you're seeing weaker currencies, you're seeing high local inflation, and of course you're seeing recessionary conditions in terms of GDP contraction. So within that, we actually grew our share. We've been investing in new product. The market has received those very well, working on our costs. So I think we're well positioned for when the market comes back, but there we're just going to have to wait for the cyclical downturn to work its way out and then start its way back to recovery, which at some point it will.
And the company said it expects to see stronger results as the year progresses. So what will mainly drive that?
What's going to really drive that is largely in Asia Pacific. We're going to see relatively modest results in the first half of the year in Asia Pacific, but in the second half we're going to really turn on the afterburner because we've got new products that will be launching around mid-year. We also have a brand new assembly plant in China and another brand new assembly plant in India that will come on stream in the mid-year period with new products, and that is really going to drive the business forward in Asia Pacific in the second half of the year.
All right, thank you so much, Ford CFO Bob Shanks.
Thank you.
And I'm Brittany Humar for The Street.